Hello, Dan. It's Trevor.
Hello, Trevor. Can you hear me?
I can hear you. Can you hear me? Fine.
Yes, I can. I can hear and see you.
Excellent.
1 second. I need to just make you the presenter. I'm using a new mouse today, so I'm still getting used to it. Okay. Okay, here we go. Make presenter. Okay. You have the power. You should be able to show your screen now. Yeah, we're looking at your fascinating tables.
Yeah. Okay.
Charts.
I'll explain that when we get
Yeah.
started.
Look forward to it. Look forward to it. Well, it's about 1 minute to 9. We'll give them a few more minutes so people can log on. What have we got here? Australian dollar looking strong.
Yeah, there it is there.
Mm-hmm.
Further to the right is strong.
Looking for, oh, I thought it was higher up. Anyway, well, I'm looking forward to hearing about it.
Yeah, with momentum. So actually, the best direction is northeast because it's getting more of each.
Yeah. Okay, well, it's 9 o'clock, Trevor. I think we can get started if you're ready.
I am ready.
Okay, well, let's get started. Hello, everyone, and welcome to another installment of our technical analysis webinar with Trevor Neil. Thanks for joining. As always, we'll aim to get through everything in approximately 30 minutes, although we do consistently overspill by 5 to 10 minutes. So if we do, please bear with us. If you have any questions for Trevor, please don't be shy. Feel free to ask any questions in the little questions tab of the control panel of the GoToWebinar widget. We'd like to remind you that the webinar will be posted to our YouTube channel in a couple of hours' time. So if you'd like to watch it again, you can do so there. And we'd love it if you'd also subscribe to our channel and click on the bell to get notified. The webinar handout can be downloaded from the handouts tab of the GoToWebinar control panel. If you're having any problems locating or downloading it, please let me know in the questions tab and I'll send you the link and you'll be able to download it. If you are new to trading, we strongly recommend that you use it because it'll help you understand the different indicators that Trevor uses, the different lexicon he uses when he's talking about trading. So we think it'd be really useful for you. There is also another handout, our CFD guide, which you can read, although that's a very lengthy document about the different trading specifications that we have at FX Choice. For those of you who don't know our specialist today, Trevor, I'll just give you a brief intro. He's a very experienced technical analyst and trader. He's a veteran, shall we say. I worked for large companies such as Merrill Lynch and Bloomberg, where he was head of global head of technical analysis, I believe. So, Trevor, let's get started. Without further ado, over to you, sir.
Okay, thank you very much, Dan. And thank you very much, everybody, for joining us. One of the advantages of being a veteran is that also means you're old, and that means that you have seen a lot of things. And I want to talk about that first before we go into this chart here, this relative rotation graph. Is we've got something happening here now, which for many people they haven't. This is the first time in their lives that they've witnessed it. We've got some bubble characteristics in the market. I'm talking about Bitcoin, some technology stocks like Tesla and so forth. So I know it always feels different this time. Believe me, I've been around long enough, and they all feel actually the same. This is a repeat of frenzies that we've seen in the past. But just a word about this condition here, which is a repetitive state for greedy humans that we are. We are definitely in a bubble, so recognize that. When we look at things like the chart of Tesla and cryptocurrencies, but we don't know when it's going to end. Now, I've been around enough, and it's forecasting the end of these bubbles, I know, is a futile thing to do. There are great rewards to be had in running with the last, particularly the last stage of a bubble. You know, I've been around a lot of times when I've thought that that things are going to top and stop here, and then they've gone on to double after that. So I'm, just because it's gone near parabolic in its climb doesn't mean at all that it's over. Obviously, there are great risks from going on to hold positions in the last part of the bubble. So the riskiness of what we're involved in now is increasing substantially. And also the sort of psychological pressures which make people do very strange things like double up at very high values, increasing their averages, turning their well purchased at lower prices positions into very vulnerable and risky positions by moving up their average. Fear of missing out is a big pressure on people at this stage of markets. In times of higher risks and higher rewards, disciplined position sizing is important. It's very hard psychologically to do, but if you think about it mathematically, you should be scaling back on your positions, not increasing their position, which many people are doing at the moment. It's easy to get carried away with the enthusiasm for bigger and bigger positions in the late part of the cycle, because if you buy in the morning, you're richer in the afternoon. So wish I bought double, and then I'd be twice as rich. Just a reminder, you know, another old person, guy called Bob Farrell, really a legendary market strategist, put it best, and I think in this when he said the following: exponential, rapidly rising or falling markets usually go further than you think, but they don't correct by going sideways. That is a certainty. So when this ends, it will not be that we will just form a plateau at some level. No, we will collapse, and the moves down will be faster than the move up. So you think the moves up are fast, you know, wait till you experience the moves down. But I don't know where from. So you have been warned. But as I said, you know, we're in this bubble, and you can't fight the enthusiasm of people to keep throwing cash into things. Okay. Getting to another market now, the foreign exchange market. Before we go down to individual stocks, I want to show you this graph. Some of you that have been with us before will have seen this type of graph before. A colleague and I, Judith de Camp and I are the developers of this type of graph, and it's on Bloomberg, it's on Reuters, Refinitiv, or London Stock Exchange, as we must now call it, and a number of other professional platforms. But if you go onto our website, you can see it for free. What it does is it combines relative strength, and so relative strength means the pound is the most outperforming security versus, in the center here, the crosshair here is the US dollar. So the further to the right on here, the bigger numbers on this x-axis here means strongest. So the strongest currency is the pound, then the Norwegian crown, the Australian dollar, New Zealand dollar, Canadian dollar, and so forth. Down to the weakest is of the G7 is the Japanese yen versus the dollar. Higher up in the y-axis is with positive momentum. So this is outperforming and with positive momentum of relative performance. So the pound, for example, here is the furthest to the right, but it's not the highest. The one that's the highest is Australian dollar. So although it's not quite as strong as the pound, it's got more positive momentum than the pound. So as technical analysts, is very important for us. You know, is it going to go further? Well, it's the pound is fine, but the Australian dollar has got upside momentum to it, and momentum, you know, leads price, and it should go further. So the simple interpretation of this is, and by the way, this is a daily sampling. So this is on the free version. This is Friday's close, not updated till now. It's only updated once a day on this version, but on the professional platforms, they're updated in real time. This is so this is Friday, Thursday, Wednesday, Tuesday, Monday, etc. Going back day by day, and you can change the period to week by week if you want. So what they're saying is that the Australian dollar has increased since between Thursday and Friday in both momentum and relative performance. So that's very, very good. So the best direction is a northeasterly direction. That means increasing in both of these things. So I always look at this, and when I'm talking about individual currencies, they're all a choice with each other, but which is best, if you like. This is where you can see easily which is best. And I put the US dollar in the center here. You could put another currency in the center if you wanted. So let's move that out of the way, and let's move to the euro. Let's go down to the currencies themselves. So first of all, the weekly chart. So each sample here is, each bar is a week in it, and we can see that we powered ahead to the 50% Fibonacci projection level off this consolidation here, measured from the March 2020 low. So A, B, C, and then D is up here, and we got to 50%. And now we pulled back quite hard from that. So it hit that 50% level, pulled back hard to its very solid support, which is at 119.50, where it predictably bounced strongly. So that's sort of the background to it now. So going to the daily chart, so this is the pullback to 119.50. It's starting to steady up again. Some people are making a case for a flag here. I think it's a good case. Maybe I'll draw it in here. There. And not perfect, I must say, but 1, 2 points here, break. That's a good breakout bar, pullback, retest of the resistance as it breaks up, and now consolidating here. So I think it's poised to break up actually, and it's so there is resistance, small resistance. And I don't think it's strong at 121.90, and of course at the high up at 123.50. But we should continue to work higher. Some other technical analysts are saying this is maybe a potential reverse head and shoulder, shoulder, head, shoulder. I'm not so keen on that one because there isn't enough of a downtrend. You know, it's really low, lower low, higher low, and not in a downtrend. But the neckline would be here, and we haven't broken the neckline yet if it is a reverse head and shoulders. But to me, I like to see a big uptrend, you know. So if we saw an uptrend and then a head and shoulders here, that would be different. But here we've got this reverse head and shoulders without a downtrend. Let's go to the big one, British pound. It might seem like I'm a bit nationalistic about this. I'm not. It's nothing to do with that. I've got no sentiment about that kind of thing. It is just the best thing. That's how it is. I see it from the RRG chart. I want to be long of the best performing market. So let's again start with the weekly chart of this. It's definitely strong. It's really, really strong. It is powering ahead towards a test of this big double top here from 2018 here, and this I don't think is going to present enormous resistance. We've got that consolidation resistance. I always put these inside these red circles, these consolidation resistance. I call them usually cigars, for those of you who are not familiar with it. So this cigar is centered on 140. That's where strong resistance comes in. But I think there's more to the upside, but I wouldn't be surprised if this started to consolidate around 140. Although it's looking strong now, the RSI is still high, but you know it's not breaking down. The MACD is positive as well, so it's still looking good. But beware, we're close to the first meaningful resistance. Which is not far away, but all the indicators and everything at this moment are still bullish, and it doesn't look as though it's tiring. The sterling euro here is when it eventually decides to come up. There it is. Yeah, there we are. So let's move that out of the way. It's a bit old now, maybe I'll take that off now. So here's the weekly chart here of GBP euro. So this is a rising price, is a rising sterling versus the euro. I love this chart. We've been talking while we had the breakout here. You know, we could say this is a reverse head and shoulder, low, lower, low, higher, low. This is the neckline. We can do the measurements from this high to this low and project up from here, or from here. We project up from here, and we've broken through the 61.8 for Fibonacci. The 100% happens to be at 117.60, which is right in this double top here with a cigar here. So that is our objective for now. That's where resistance comes in at 118. We've cleared this resistance here really with ease, with surprising ease, and so that shows great strength in the market. Really, it took no notice as it went through that resistance there. And so this is looking very, very strong indeed. The RSI, of course, is very high, but it is still pointing up and looking strong. That is a sign of strength, not weakness in the market. Yes, it's very hard to maintain. It's vulnerable. All those things, it's true, but at the moment, it's not weakening. So don't go against that. The MACD is of course positive. All the moving averages are pointing in the right direction and in the right order, and we'll keep pushing the edge of the Bollinger Bands. Everything is strong at this moment, vulnerable of course to resistance, but it has just broken through a resistance level, and the next significant resistance level is quite far above. Let's go to that other strong one, which is a commodity currency. The commodities are booming, except for gold and the other precious metals, but the base metals and the grains and oil are booming. We've got a commodity boom underway. It's just not spread through into precious metals. But the Australian dollar here has made that break we've been waiting for. Let's quickly look at the weekly picture first. But the short-term chart has just made the break of this high here. We're on our way, continuing our journey higher. This Fibonacci projection is off this move here from the March low to the high here, pull back here and extending. So we're taking this measurement from here to here and adding it to the 70-cent pullback from the end of last year, and so we made these projections up. We broke the 38.2, went to the 50% level, like this is like a dream. Then we reacted back to 38.2 level. We've stabilized there, and we've pushed through, and we've broken to a new high now. Don't forget, I'm going to give this a cigar here. We've got this double top in place here, but we are pushing hard into this resistance here. It does look very strong. Going to the daily chart now, we had this fantastic move on Friday, which took us out through the high. That was a flag there, and we burst out of the flag formation, but now extending that into this new flagpole here. It does look good. I do like it. I like it a lot because of its position in the RRG chart. So we've got other currencies that we can use to exploit the weakness of the dollar, but these are amongst the best one. The other one is Canadian dollar, again because of the commodity. It is a beneficiary. Now this is perhaps a more interesting chart if you haven't got already into the Australian dollar and you're not already making good money from that, because this one looks ready to make its break. So this is expressed this way around. So this is moving down here is dollar weakness here, and we are testing these important lows. But again, I'm just flicking to the weekly chart to get the context clear for us. So here is this low that we're testing here now, and we've got these various minor support levels ahead of us, but we're participating in this long downtrend here, which is continuing. The oscillators are still negative. We had a bit of a bullish divergence here, which really caused the slowing up that we had, but that's now broken, and I think it's about to resume. So my call is that this low is going to give way. This low will give way, and we will leg lower, and we'll get some power from the break of that low. And then this whole area here will become a resistance level here. So this gets a cigar now as a resistance level. When I say a cigar now, it doesn't quite get the cigar yet because we haven't made the break, but I think we're testing and testing, and I do think that this is about to make a break. So this is a trade that may well be just starting its next leg, and you've got the trend on your side very, very clearly here. Next one is the New Zealand dollar, also a beneficiary. It's a slightly different pattern here. Sorry about that. Oh. Okay, there we go. Again, let's go from the weekly point of view. It's important to get this context here. We're powering ahead here, but into this big cigar here. over here from 2016, 2017, 2018 area. But look at the strength of the market as it does it, where the RSI is once again on its way up. The weekly MACD nearly crossed but didn't, and that's a real lesson in don't be premature about these crossovers in the MACD. The 50 and the 200-day moving average are once again widening out. Bullish strength is increasing from a long-term perspective. And on the shorter term, now the daily chart, we're testing this important high here at 73.14, sorry, here this morning we broke it, pulled back, and we are testing it. I think we will finally break it and break out of this range that we've been in through most of this year and continue the leg higher. New Zealand dollar strength versus the US dollar. Then this brings us to, New Zealand dollar, Japanese yen is one of my favorite charts, really because you remember the Japanese yen was right over on the left hand side of the RRG chart, and so this is one of the best things to pair off, even better perhaps than the dollar itself. And so here we've got the New Zealand dollar, Japanese yen. Let's look at the weekly first. Look at this, it's fantastic. I measured from the March 2020 low up to this high, that's my AB. Then I added AB to C, which was the pullback here in August or so, and then projected up from here. We went through 38.2, went through 50%. We've gone through 61.8%. Usually when we break the 61.8%, we do go to the 100%. That's at 80.80, right in the heart of this cigar here from 2017, right back there. And that is where I think we're headed for this one. So lots of room on the upside here now. Market strong. So, we pullback that we had here was extremely weak. The last decent pullback we had was right back in the first week of January or second week of January, but we're legging higher right now and it's extremely strong. And this leg, it doesn't look like faltering yet, but get on board this one. It's a big one. It's got a long way to go. Moving now to Bitcoin, the big market, $1 trillion market here. To the weekly chart of it first. Going back to 2015 or so, when it was down at the stable level down here, I measured from A, B. We did this, we did this years ago, this first measurement, B, C. So we added A, B to C to the pullback in 2018, the end of 2018, and then we got these projections from there. And so we've gone through the 50% level, but look at that, that was very troublesome all through 2019, 2020. Then when we burst through it, we went straight through without really noticing the 100% level at 22,000, 161.8. We did consolidate. Now we've gone to 261.8, which I now think we have broken. And so where is the next level? The next Fibonacci level is 423.6. You don't see those too often. You do see them, but you don't see them too often. And that's at 83,000. Wow, 83,000 there. So let's go to the daily chart here. Now I've got a smaller measurement here from the 2020 low to the high in January this year, back to the pullback here. So A, B, C. Add A, B to C to get D, and therefore we broke through 38.2 was the previous high. We did that with a powerful candle there, gone through the 50% level, and now towards the 100% level. So that gives us an intermediate objective of 60,600 on here. The RSI is this current day today with this black candle. If it finishes like that, we've eased off a little bit, but still it hasn't broken my 65% level in my RSI to give us any sort of indication that we've got an interruption. The MACD is still positive. I'd love to see it come down and bring the RSI down below 50 again, to get a dip to participate in, but the trend here is extremely strong. Of course, it always looks strong at the top, doesn't it? So I meant to say, I did say this all at the beginning, but at the moment the technicals are still very, very strong, and it does look as though it's going to go higher. Right, moving now to gold. Oh dear, gold. We tested but didn't break actually the 7-month low. A lot of press sort of said that we had we were trading below it. We haven't actually. We bounced at it, and this is quite an important level, and a level which might actually hold here. So this is I measured from here to here, pull back to here onwards. This is the 50% level. I think there's hope for gold yet, in that I think it's forming a flag. I put a little flag pattern in here. I put dashed lines because they're not well drawn lines, but we're definitely drifting between a parallel channel. So I do think that that this is building up actually to ultimately resolve itself to the upside. But we have to break out of the flag. We have to go through 1,900, which is a long, long way above us. And we can still break down through the important lows here at 1770 and still be forming this big flag here. So it doesn't look good, but it's maybe, you know, the rotation maybe out of Bitcoin into, might be back into gold. Again, if Bitcoin does make a break, and maybe gold's getting ready for that, to be the beneficiary of that. But it is hard to understand when inflation is looming its head. In reality, it's looming its head, and interest rates in the US are now really moving up strongly, and commodities are really moving up. The gold is not moving up. It's the traditional hedge there, but it's suffering, I think, from the increased yield in the US. I didn't, so I'll leave that there now. Let's go to the S&P, to the US 500 weekly chart, of course, just to see this soaring ahead here. We can always say we were warned, can't we, with this bearish divergence in the weekly RSI here, but still it's making new highs. And so it's really frustrating for technical analysts when you get these long bearish divergences. The MACD, weekly MACD, is still positive, still creeping higher, but it is very vulnerable. There are lots of internal measurements of this that are very vulnerable. This rotation and the valuations that we're getting in tech stocks and non-performing tech stocks are very, very worrying. So if it does crack, we'll be able to say, oh well, it was very obvious why that was going to happen. But it isn't really looking like it at the moment. The RSI has come down through 65 here, so this would be, for me, an intermediate term sell signal. That's but you know, that's only the tide, sorry, a wave against the tide. It's not the tide that has changed direction, and so we can easily pull back a bit from here, but we pick up some light support around the 3,850 level around here, and then we've got lots and lots of support, but none of it very strong. So beware of that. You know, if it really does want to turn down, it can turn down a lot without picking up a big support. You'd have to come back to 3,600 to find some big support. But most technicals are still bullish. 20, 50, 200-day moving averages all in the right direction. But maybe we're starting a little small correction which might last a week in this bull move, and so I'm not for the moment, I'm not saying it doesn't mean it means anything more than that. The Ftse, not good at all. In fact, very volatile last week. Oh, incidentally, just in passing about the volatility, what is, and one of the other alarming things about the US 500 is the VIX index, the volatility index, is below 20, and this is really a very low reading when the market is at such a high level. This means that confidence, bullish confidence, is extremely high. People see very little danger of the market falling. So when you get this level of excessive confidence, that is a warning of potential vulnerability, but not, you know, it's not seeing it in the charts yet, only the minor minus, but we see these all the time as we zigzag our way higher. So in the Ftse, the UK 100, we're forming this triangular shape. I've drawn this as a dashed line across the top. It's narrowing up. Last week we surged and fell back very sharply there, and it's very disappointing that that didn't follow through. I did really think it would follow through, but inevitably it's suffering from the strength of sterling. You know, I said last week, you know, it's surprising how well the UK 100 is doing, given that sterling is so strong. But reality took over here, and we pulled back in here. Just in passing, watch the German index. It is testing important highs here. So I'll show you the daily chart here. It's still consolidating below the highs, but we're within striking distance of the highs, and so potentially this could make a big breakout, and that's what a different chart that is from the Ftse. My favorite, as you know, is the Japan 225. We've sort of consolidated a little bit in here, but nothing to concern us here. This is a really strong market. I won't go back that 30 years like before, but you can see we're back trading at 1990 levels. It is very strong indeed, and it really looks as though it's going much higher. And this is really is a leader. If I did an ROG, if we had more time, I'd show you that. And this is a leading one of the stock indices, and so this is the place to be, really, and looks a lot better and less vulnerable, funnily enough, than the S&P, the US 500. Going to crude oil. So here's the weekly Brent crude oil. We're powering ahead here, which is causing inflation worries. Look at the RSI here. You know, you think it can't go higher, but yes, it does. It goes higher. The MACD also still very positive on the weekly chart. We're within striking distance at $67 level I called at when we were down here. That's the 100% level, and that is this cigar consolidation here from 2019. Really, the resistance starts to stiffen quite soon here. So this is probably the best bit of the crude oil move is behind us now, but it's still looking pretty good in the short term, and small easiness here, but it hasn't really broken down yet. But if it does, we've got support here at 55 area here. I'm going to give it a cigar here, just to remind us where that is there. But because you know, with a strong move like this, pullbacks are likely. We have got the RSI pulling down, hasn't broken through the 65 level yet, so be aware of that. Giving up too early on this, it could be just another one of those there that we're having right now, but need to watch it, and every day is a new day. Gold, we're done, sorry. So Brent crude oil. So I'm going now to the stocks. We were, I mentioned the last time about the banks, the rebound in the banks, and they are doing well. And so, you know, if you want to be less aggressive in the market, you know, and move your holdings out of the tech area, the danger of the tech area, you know, some of these tech stocks like Amazon, for example, you know, it hasn't gone up for a long time, you know, and they're quite vulnerable, some of them. But look at JP Morgan, for example, is a lovely bank stock that's making its break to new recent highs here. So let's just see here. Look at that there, breaking this 2020 high here. And so this is, you know, the US bank stocks are looking good, but don't forget the European bank stocks too. They come from a lower level and therefore potentially offer more swing to them. This is BNP Paribas, and this is going up strongly. This is the weekly chart here. Weekly MACD is positive. The 50 and 200-day moving average is positive. We have broken out of this consolidation here. We're pushing higher towards this double top here at about 54, and the daily chart, well, it's looking really, really good as we break out of this consolidation here. So I think we're starting another leg higher in this one now. And so I think we're headed to that 2019, 2020 high at 54. Another good one is Santander. So let me show you the weekly chart on that firstly, get the context of it. So we're breaking out of this consolidation here. I've measured from the March pullback to the high. That's the ABC at 2.4, and then up from here. We're testing the 38.2%. I think it looks good. If we look at the daily chart, you'll see I think it looks good. I think the weekly divergence has now been broken, and we're on our way up now. But look, what is lovely about this is we've got blue sky above us until we reach the cigar up at 360 up here, which would be about around the 61.8% level. But you know, I think we're on our way to that 100% level up there, which is at 380. So the daily chart on here, this is the consolidation, the cigar that we were breaking out of, and I think this is a good break, and we're on our way now. The RSI has pulled back a little bit, but I see this now as an opportunity in the market. The trend is up. We've got higher lows, and we look like we're heading up, and so pullbacks are likely to be weak in this market now. Okay, thank you very much, Dan. Did we have any questions as we went along?
We do, Trevor. Yes, if you've got time for a question. It's from Gregory Amos. Thank you very much for your question, Gregory. Is gold now outperforming silver or the S&P?
Right, good question there. So let's go and look, and luckily I have at hand a graph to show you that. So let's look at gold, and then gold versus the S&P here. So here's the answer to that. Gold versus the S&P. So rising is gold outperforming the S&P. Falling is gold underperforming the US 500. The answer is it's underperforming, and the stock market is better than the gold market. And we really looked at this, didn't we? And we watched this, and we saw the importance of this level. We watched it test and bounce and then make its break, retest, and we have watched this happen. And so this year, we've been very clear in our own minds that gold is underperforming the US 500. Going back here, the other question the gentleman asked was gold versus silver. And again, I have a handy graph of this. And so this is gold divided by silver. And so this, if it's rising, then this is gold outperforming silver. If it's falling, that's gold underperforming silver. So gold is underperforming silver. Silver is looking mildly bullish, whereas gold is looking quite vulnerable in the short term. And that's the picture that shows up here.
Okay,
Any
sorry, Trevor. I was listening to you. I was just briefly. Sorry about that. No, thank you very much, Trevor. Well, that's it. I think. I hope that answered your question, Gregory. Anything else,
let
Trevor?
me show you one more thing, if I may. Sorry to do this, but jumping back to the relative rotation graphs here, we saw that sterling one. You see here was the yen furthest to the left, sterling furthest to the right. But another one which is very interesting is actually the cryptocurrencies versus the dollar. And so we think, you know, we focus, or I do anyway, I'm sorry, I do focus on Bitcoin, but Bitcoin is here. So, you know, don't forget, strongest versus the dollar is furthest to the right. So Binance is furthest over here, IOTA here, Dash over here. These are all much further over to the right than Ethereum and Bitcoin, which are of the ones which I track, are furthest to the left. So the the real action is actually in the minor ones there. But just to show you a picture of that. But I mean, being long on Bitcoin is good enough for me.
Oh, thank you very much, Trevor.
Okay.
Okay, well, I think that's it. Thank you very much for attending, everyone. Please, as always, join us again next week at the same time, same place. And don't forget that we'll be posting this webinar to our YouTube channel in maybe in a few hours. So if you came later today and you want to watch it again from the beginning, or you just like to watch the whole thing again, or you'd like to watch a particular piece again, please head over to our channel and don't forget to subscribe and click on the bell to get notified for any future notifications. Okay, anything else to add, Trevor?
No, I thank you very much for the questions. I like more questions. If you have any questions, don't be shy. That's important. Please tell your friends about this. I hope it's useful. Send me any comments or send us any comments if you've got ideas to improve it. What am I not doing right? I'm a trader. I've got broad shoulders, so I can't be insulted. The market does that for me. But I would like to make it as good as you want it to be. So please, feedback is really helpful to us. So thanks very much, Dan. I really appreciate it. Have a good week. And
you too.
Yeah, I'll talk to you later. Okay. Thanks, everybody. May the trend be with you.
Bye-bye. Bye-bye.
Bye-bye.